So you found that fixer-upper home, but you don't quite have the extra money to add the renovation costs. Well, I got you, because there's a program that allows you to add the renovation costs that you're planning to do to your mortgage before you've even done the renovation on the home that you're looking to buy. And no, this is not a construction loan. This is completely different. Now, this particular program works, and I know because I've used it twice on two particular homes to increase the value and just genuinely make the home a heck of a lot nicer to walk into. So I'll explain the details of how this program actually works if you're looking to buy a home and get a mortgage in Canada. What's up, guys? Alex McFadyen here, the owner of Flow Mortgage Co. And I've got a program called the Purchase Plus Improvements that allows you to add a renovation cost to your mortgage. Now, this program is legit. And the reason I say it like that emphatically is because I've actually used it multiple times and it's had a substantial impact on the work that I've been able to do. So I'm gonna explain how the program works, but I'll also tell you about my experiences with it so I can give you a firsthand review of how it actually worked for me and how it's worked for a number of my clients. Now, the key thing about this entire program is really, honestly, you have to kind of know what you're planning to do and be relatively organized. This program does not work out very well for people who are not organized or don't know any idea what they're planning to do or have zero desire to be organized or get things done on time. This is definitely not the program for you if that's the case. Now, what is Purchase Plus Improvements? Basically, what it is a program that allows you to add the renovation costs that you're planning to do of your upcoming condo or townhouse or house or whatever it is into the mortgage itself. So what this does is, in a situation where you don't necessarily have savings or you don't want to use all of your savings towards this rental cost, it allows you to essentially increase the property value potentially dramatically or do whatever renovations need to be done to bring the home up to livable measures right away when you buy the house itself and close on it. But there's a few key things that you need to know. And stay tuned to the end of the video because, like I said, I'll give you some of the tips and tricks that really help me when I use this program, and I think it'll help you too. So first and foremost, there's different variations of this program at different lenders, and all different lenders have slightly different modifications of how they're going to do it from one bank to the next. And that includes how quickly you need to get the work done, how much money you need to put down, how much money they'll lend you, and so forth. But for the sake of today's conversation, I'm just going to basically break down the guidelines that the insurance agencies use, and I'll let you know that there is some wiggle room outside of that. So let's say, for example, you're purchasing a property and you have 5% down on a property. It's $500,000. Now, in this circumstance, you're getting an insured mortgage, and insured mortgage guidelines are very simple. They essentially allow you to borrow up to 10% of the property value as per the purchase price. So if you paid $500,000, this allows you to borrow up to $50,000 for the potential renovation costs that you're planning to do on the home. So the first step of the process is to get properly pre-approved for the amount of money that you're looking to borrow. Now, this is key. For example, if you're purchasing a property at $500,000 and you don't qualify for anything beyond that, then you can't actually qualify for this program. Basically what it does is it slides the scale of the purchase price up, so you need to still be able to qualify. So let's assume, for example, that you qualify for $600,000 and you buy a $500,000 property. You can add up to 10% of that amount, which is $50,000 on top of that amount, as we discussed previously. So now you've essentially got a new purchase price of $550,000. Now, the first step that you have to do is you have to be able to, of course, get a quote. This quote is key, and it can be done in multiple different places and multiple different sources. So essentially what has to happen is you need to get a quote for the work that you're planning to do on the property or for any work you're planning to do on the property up front. So in my circumstance, I had a variety of different contractors and a general contractor. So what we did was, in the first week, we had the general contractor go through and provide us with an overall quote of the work that we were planning to do on the property. From there, we were able to look through and figure out what we wanted to do, what we didn't want to do, and figure out the costs and if they were to work within our budget. And let's say, for example, this $50,000 budget, if it came in at $60,000, you might trim the fat and reduce that down so that you had a $50,000 budget for all those expenses. Now, once you've actually received that quote, you would submit that to us as your mortgage broker, and we'll submit that to your lender. Now, unless there's something really, really weird or odd in there, your quote should be accepted. The only thing that you cannot include in there is items that can be taken away from the home. Like, you can't include a hot tub or a TV or a refrigerator, but you can include countertops and paint and changing the walls or adding a bedroom or any of these types of things. As long as it's on the house and in the house and it stays in the house, you can actually include it. So you've submitted this quote, it's been submitted to your lender, and let's say they approve it, which they should if you were pre-approved. Now your total purchase price ends up being up to $550,000. So the first thing is you have to make sure you have the down payment money for that $550,000. And if you're putting the minimum down, that is going to be $30,000. That's 5% for the first $500,000 and 10% for the amount above that. Now, this next step of the process is, after you get approved, is to fund on the mortgage. Now, watch one of our other videos where we talk about the mortgage funding process. We can talk about that later. But ultimately, once you're funded on the mortgage, the next step actually begins. So you get the keys to the house, and now you enter boom, you don't actually all of a sudden get that extra $50,000. What actually happens is now you have to actually complete the work. So in this case, let's assume you're working with contractors. We recommend that you have a discussion with them to let them know that you're working with this program. Many of them have experience, so they can look at taking either 50% upfront and 50% at completion or deposit. Now, in most circumstances, we've found that a lot of our buyers will either use a gift money, savings, investments, they'll use credit cards, lines of credit, any of these different types of things to actually pay for that initial work while the work is being complete. Now, once the work is being done and you've got your beautiful new bedroom or paint or flooring or tiling or whatever you had to do, then you're gonna get an appraisal. And that actual appraisal is key. See, the thing is, the lender itself wants to make sure you did what you said you're gonna do. So if you said that you were gonna do granite countertops and you just didn't do any countertops at all and instead you painted the wall pink, well, that actually isn't the work. So they're not gonna actually give you the money back for that, and that'll just end up coming out of your own pocket. Now, with that being said, you could have pink granite countertops, you could have any color you want, typically speaking, but you just have to make sure you're doing the work that you said that you're going to do. So it's fitting within the scope of the work. So when we get that appraiser, the appraiser comes in and they basically have a checklist of all the things that you said that you're going to do, and they're going to check them off step by step by step to make sure that the work that you said you were going to do actually gets done. And this is so key, guys, because ultimately, if you do not do that work, you will not get the money difference for it. Now, let's assume you did it all, they check it off. Essentially, the next step is the report itself gets delivered back to the lender. The lender typically takes anywhere between 1 to 5 business days to confirm that everything is good to go, and they give the green light to your lawyer, and your lawyer then transfers the money to you electronically or via a certified check for you to go ahead and put that money into your account. Once you've got the money in your account, you can go ahead and pay off all those debts or pay back whatever loan that you took on or whatever that was to get the money in the first place. Then voila, you've got your renovations done, you've increased the property value, and you have a new home. Now, I did explain to you that I've used this program myself, so I want to actually give you some little tips that I learned along the way. Number one, if you're putting down more than 20%, there are a variety of different ways this program works, and it's not necessarily just up to 10%. Some lenders will only do 5%, and some will do up to 15% in some circumstances if it makes sense, even more on a property. So the limitations really change if you put down more than the amount that I shared. Number two, it's really key for you to have your trades and have a contractor lined up in advance. Now, this is something that I experienced in my most recent purchase, where I already talked to a few people about the work that I was planning to do on a few potential homes when I was already looking at them, and they were able to come in really quickly and be prepared in advance because they knew that I was serious about getting this work done. So we had pre-negotiated the work together and had a general idea of what we were going to do. It was just the specifics on that property, and things had to move really quick. So it's definitely important for you to find people who are quick and or available and that you trust to do the work during that time. And if you don't know somebody, you should definitely ask for recommendations from people in the industry who have worked with them in the past, because that's absolutely key. Another hot tip is if something does fall apart and the contractor or the tradesperson doesn't work out for you, you don't have to work with them. You could work with somebody else and have that work done. In fact, in one of my circumstances, I had someone who did an awful job and I had to actually get their work redone completely. I was able to find somebody completely different who redid the work, thankfully, at a relatively low cost and get that work complete exactly to the way that I was wanting it to be. And it didn't matter that it was the original person or not, as long as the work actually got done. Another thing that I highly recommend is to ensure that you have access to a good line of credit or credit cards or something of that nature available to you without any money on them before you start this renovation. In so many circumstances, people don't have enough credit or the money where they were getting from a family member didn't work out. So you got to make sure you have that money readily available. Another thing to consider is there are delays in timelines. So you got to know if your lender actually needs that done within 120 days or 60 days or 30 days, that you set clear expectations. Now, thankfully, I've worked with this multiple clients and I've worked with it by myself, so I have a very good understanding as to which lenders need what. In fact, some even ask for receipts, whereas others don't, and they just want the appraisal. But the key to all of this is that you're working with a pro that actually knows what they're doing. Now, I could go on and on and on about the different tips. Obviously, if you're working together, I can explain even more, but I think I'll leave you with this is probably one of the most underutilized programs that I have seen in the marketplace. And having used it personally twice, I've added not only just an increase in value to my home, but literally doubled the value. We've added a basement suite. We've done massive renovations that have made a huge impact on the resale value and the appraisal value of the home. In fact, in our first renovation, we increased the potential value of the property by over $100,000 more than what we actually spent by doing this. So this is a great opportunity for you to get into the market at a low price and potentially increase increase the value, allow you to even extract that money out of the property for a later time. Now, if this interests you and you want to find out more about how this program works, just make sure to apply. Go to our website below and I can help you out. If you found this video helpful or if you used it yourself, I'd love to hear your feedback. Let me know in the comments below.